India is 105. Not current asset held for sale and discontinued operation. So non-current asset. The asset is held more than in the books of account, more than 12 months. Held for sale and discontinued operation. So which is held for sale and some operations of the company or some operation it's been not followed. The objective of the standard is to specify that the accounting of assets held for sale and presentation and disclosure of discontinued operation. Objective is to disclose this event, sale and discontinued operation. These are non-current assets are ready for sale, and this non-current assets which we had is discontinued operation. In particular, India is required in respect of assets that meet the criteria to clarify as held for sale, to measure at the lower or the carrying amount or a fair value less cost to sell or depreciation of the asset to cease. So how you should consider this measure the asset or measure the asset is lower the carrying amount. That means asset what we purchase, then depreciation. What is the carrying amount is that, and fair value less cost to sell. And the current fair value of selling this asset is this much amount, but to sell this asset, we need this much cost. So we subtract the cost and depreciation on such asset. So cease. So not only cost, we should reduce the depreciation also for the current period. Then after you give, that is the value of the asset you should need to give in NDAs. To be presented separately in the balance sheet. So this NDA is 105 non-current asset held for sale and discontinued operation should be held separately in the financial statements. The result of the discontinued operation to be presented separately in a statement of profit and loss account. So, result of discontinued operation to be separately shown in the profit and loss account next to the operations standard. Adopt the classification of held to sale, the introduction of concept of disposal groups being group of assets to be disposed or by sale or otherwise together as a group is a single transaction and the liability directly associated with the assets that has been transferred in translation. To introduction concept of disposal group, something going to be disposed. Being a group of assets to be disposed, not be a single asset, a group of assets can also be disposed by a sale or otherwise. Be disposed by way of sale or just we leave it like that. Together as a group in a single transaction and so in a single transaction, everything assets and liability and everything is being sold or a liability directly associated with the assets that will be transformed in the transactions. Example, we have a liability, we have asset. This liability is we want to pay you this much amount for that we have this asset. Will you taking it or are you ready to take that asset? Such a way also we can close it. The classify is an operation as a discontinued at the date of operation meets the criteria to be classified as held of sale or when the entity is disposed of operation. So classify is an operation as a discontinued. Okay, this operation is continued at the date of operation meet the criteria to be classified as a held for sale. So this as such a held for sale. We should disclose it, and or when the entity has disposed of the operation. So sometimes you have no idea in the financial year. You thought so in the May month, to say, sell it, and you sold the asset in the April month. April, May, na, June, July, August, you sold it. Now what happens? Actually, the sale we thought of to discontinue operation. Actually, that asset has been sold. So we can mention previously in the financial statement. Na? So that is we mentioned. Entity shall classify a non-current asset or a disposal group. Refer to one brevery as asset and held as a sale if its carrying amount is recovered. Carrying amount will be recovered principally through a sale transaction rather than discontinuing use. What they are saying is the entity shall classify a non-current asset. It's a non-current asset or a disposal group as held for sale if the carrying amount will be recovered principally through a sale transaction. Only the entity can consider as a non-current asset if they believe so when we sell it, we can recover the principal cost through a sale transaction rather than through continuing use. You're not going to use it, we're going to sell. If we able to recover the principal transaction, we can consider as a non-current asset. If not, the sale includes exchange of non-current asset when the exchange has been commercially substantial as per Ind AS 116. Okay. For the case, asset must be available for immediate sale in the present condition, subject only to terms that is usually usual and customary for sale. Such assets and its sale must be highly probable. So when you classifying as a non-current asset for sale, it should be highly probable this asset to be sold. Thus, the asset cannot be classified as a non-current asset or a disposed group held for sale if the entity intend to sell it in a distinct future. Oh, if you think that we will sell it, sir, we are seeing for a good price and we waiting for the good purchaser, so we can wait. If you say so, you can't hold it in the non-current asset. For a sale of a highly probable, the appreciate level of management must be committed to plan to sell the asset and the active program to locate a buyer and complete the plan must have been initiated. So to have it in the non-current asset, management to take steps forward to find the buyer to what to sell this asset in a fast basis so that you recover the cost and you can reduce the cost. You can reduce depreciation. You can sell it and you can have it in the non-current asset. That's it. Further, the asset must be actively marketed for sale at a price that is reasonable in condition to current fair value. Not only this, the asset what you're going to sell, the value you are seeing in your auditor, if you're able to come through in the peer review or not peer review, in the concurrent audit, you're going to find that internal audit, you're going to find it. This asset is going to be sold. You should see the value. What is the value? The value is a current value. Value is a fair value, and it is as per the current market price. You should check. In addition to the sale, should be expected to qualify for recognition as a completed sale within 1 year from the date of classification. The action required to be complete. The plan should indicate that it is unlikely the significant changes to the plan will be made or the plan will be withdrawn. What they are saying? They are saying that so okay, you have a plan to sell the asset. You sell the asset. Highly probably it should be sold in 1 year. That's what they say. Highly probably it should be sold in 1 year and this plan should be completed in 1 year from the date of classification. The para 9 read with apex B of the standard provides the criteria which is required to be met when the sale cannot be concluded within 12 months. What if this sale is not completed 12 months? This para 9 of appendix B is giving idea what to do. The standard also applies to assets which are held for distribution to owners. Sometimes this asset in the liquidation state, the company has some asset, they can't use this asset, they can't sell this asset. But the likely owners are willing to take the asset or buy the asset. That you can say on behalf of the shares, we can take this asset. They are likely to buy it, so that can also be used. This condition specifically for sale as above also applies to distribution. That is distribution within 12 months, including considering the required permission for distribution, non-withdrawal of plan to dispute, etc. So usually this to sell it, we should have only 12 months. That has been clearly said. And the requisite permission for distribution, non-withdrawal of plan to distribute, etc. So once you take it, there is no coming back, sir. That is what said. You should sell it. Discontinued operation is a concept, component of the entity that either has been disposed or its classification is held for sale. So this component, what they say is we can't sell this asset, sir. Okay. And in this discontinued operation, we having something classified as held for sale. If we can sell it, we can dispose it. What we can do? Put it in the head discontinued operation. They represent a separate major line of business or a global geographical area operations. It's a part of a single coordinated plan to dispose of the separate major line of business or geographical area of operation. And it is subsidiary acquired exclusively with the view to resale. What is this? So, not only that, I have a business in Canada. I'm going to completely sell it. I discontinued the operation. There is some land, vehicles, asset. I have no intention to pay in customs duty to bring in India and use it. I'm rather right to sell it. Hmm. And what is that? This is discontinued operation. Sometimes you buy a company, some company 30%, 40%, you in holding company completely you buy. But you are no likely to continue the business. You just fired every employees. You breaking the company into parts and selling the company in parts and earning profit. That is also company discontinued operation. The component of the entity comprises operations as cash flow that can be clearly distinguished operationally and in financially reporting purpose for the rest of this entity. In other words, component of the entity will have been a cash generating unit or a group of cash generating units while having held for use. Entity shall not satisfy and held for a sale or non-current asset to be abandoned. The entity shall not satisfy or held for sale non-current asset that is abundant. So you can't have any non-current asset which is abundant or not able to sell it. The standard specify that a specific treatment measure it is circumstances when there is a change in the plan to sale of asset, which is previously classified as held for sale. So there may be a process. What happens? Standard I have given a statement. So previously I thought that this asset we can sell it off. Right now, we thinking that this asset can be used for this business purpose. You are taking again, you putting in non-current asset. The entity shall present and disclose the information that enable the user of the financial statement to evaluate the financial effects of discontinuing operations and disposal of non-current asset. So for the entity is always working for the user. User is a shareholder. And now what happens is they giving the full disclosure why we think that this asset is not being used, why we think that we need to discontinue the operation, why we think that it is waste of money, why we think that we need to sell this asset. We need to disclose it properly, present it in the financial statements to enable the intended user to evaluate the financial effect of this discontinued operation. Thank you.